Welcome everyone to another episode of Price Targets with your host Bitcoin Jack. Welcome back. It's Thursday, and as promised, new video today. We're gonna be looking at a potential top being in for Bitcoin, and my bias on ETH has turned slightly bearish again, at least on the BTC pair. We talked about it potentially going up and potentially reaching new highs. I've changed my mind on that. We'll dive into that. So Bitcoin here, I added a few lines compared to last week. I'm going to be talking about those and why I think they're important. But first, your attention for our lovely sponsor, Prime XBT, the exchange where you can trade futures, spot, equities, and commodities. They're sponsoring these videos, so if you appreciate these videos, consider checking out the link in the watermark in the description below. And if you use the promo code BitcoinJack, they will match up to 0.5 BTC deposit bonus. But do note there's some conditions that apply, so make yourself aware of those. Thank you once again, Prime, for sponsoring, and let's dive into the Bitcoin chart. First thing to note. So we had this squeeze. The question is this squeeze going to turn into rally or not? I think this here is kind of a key level for price to get rejected by or not. But if we go through it and get accepted above it, I do think that we're going to go test this breakdown here. And then, so we had this line in a previous video, this diagonal, which we bounced off of. And then we have this one, which is perpendicular to, perpendicular? Is that? Perpendicular is like this, right? So, no, parallel. That's the word I'm looking for. And these lines as well. And as you can see, this is the exact middle, this line here. And all of these lines have similar spacing in between them, right? Now, if we extend the left here, you can see how that lines up with all these levels. So there is this kind of, tilted sideways range. If you like to trade ranges, generally, 1 second. Generally, you have something like this, but it does occur, as you can see, that there's diagonals inside consolidations like this, where levels actually do kind of matter. Obviously, it's kind of shitty because it goes above it, below it, etc., etc. How do you exactly know? Well, it's just like, it's above it right now, so that would kind of practically suggest that this is, as long as it's above it, it's gonna try and get to the level up here. And if we can align that with a horizontal level, so for example, we draw this line here, and we got kind of like a trend with a certain speed and direction, that lines up nicely. So in my opinion, the horizontals are more important, but I will definitely keep an eye on these diagonals here. And then we have the horizontal level here. So I do think that if we see momentum fade and see rejection here, that's going to bring us back down the diagonal and then back down here. So far, there's no reason to, fully pull the trigger on anything, except that this is resistance. So you can play this, but right now it's difficult to identify where to put your stop, right? And there's definitely been buyers all the way ever since we started to come into resistance. So it's kind of tricky here to just go blindly short. But I'm gonna definitely be looking at it. So if we zoom in, we can see that we took out these two highs, the block that pushed us back down. So if we claim price above that, I do think we're going to go for this high, and we're going to go for these equal highs up here, which is exactly the inefficiency that we left behind on the way down. And it kind of comes together with this diagonal and this diagonal, though this diagonal is probably it's probably going to get broken as we approach the inefficiency. Maybe it's going to get stuck on it, I don't know. So what I'm looking for here, well, there's one thing to note, right? This could be just, less and less sellers at resistance, but volume is dropping. So if we kind of, don't manage to get above here, and we trade lower again, then I do think that that's going to propel us at least to these lows and these lows here. So kind of waiting for that to pull any trigger. You could aggressively short this, but I don't, it's always tricky. And the question is, where do you put your stop? Do you short it here and then put your stop up here? Which, it's kind of a little bit of a blind short in my opinion. So I'd rather, wait to see some confirmation on, oh, that's the wrong one. This is 1, 2, 3 kind of impulses. I would rather just wait for some kind of rejection here. Just the same like as in here. Just get below, back into the range again. So if we draw, let me grab a little bit of a clean chart. Okay, so let's grab the hourly. We get something similar to this. Or we get rejected and then below it. But for now, there's no reason to believe that's the case. Price is pushing, and it would be a short-term trade. We take the smaller one. So if this is the range high, wait, this is the range high, and this is the range low, then it would make sense to short it. This gets rejected and then retested, and then we trade back down here. And I do think if that's gonna happen, we're gonna come back down and kind of retest the fake out here. That makes sense. But for now, I think it's looking as if it's gonna go up. Just to recap on a slightly higher time frame, if we claim the horizontal here, it's probably going to trade into here. And then where does our stop go? Well, I probably put the stop below here. But yeah, I don't know. I'm not going to trade this into here personally, and then just waiting for the short setup. I do think that we look at the S&P 500, which had this deviation on the range high, and now it had this rally down here. This is the middle. This is 50%. Right? prices here. There's these highs here. I'm not really sure if it's going to run it, but there's an argument to be made that we're close to topping out here on the S&P 500. Maybe take out these, make a slight deviation, and then if we trade back below this level, I do think it's going to trade back and retest the level down here. So maybe this is the place to short it. Maybe it's going to go a little higher, take out these stops, and then come down. But if that's, if that's what's going to happen, obviously that might or should generally take Bitcoin with it. So I think right now it's just a very good moment to keep, to keep the intention on the market in the next couple of hours. It's earnings season as well, so there might be some ugly earnings over the next couple of days. People who might actually already have some insight into that, where things start to sell off. So this is ETH BTC. It's still juggling, up and above resistance, taking out this high here, taking out this little wick here, kind of almost traded back into the support it had over here, but just not quite reached it. Just, I would have expected it not to wiggle here for that long. And setup remains the same, but I do think that Bitcoin is going to catch up in terms of relative gains to ETH. So maybe Bitcoin is going to rally and then ETH BTC is going to sell off, or maybe they're both going to be bearish. But somehow I do think that this rally is going to get a little bit of a pullback. So Bitcoin is going to catch up on the relative gains that ETH made versus Bitcoin. Oh yeah, and we talked about Luna, right? So where's my red bars? Oh yeah, it's here. So what we talked about last week is on Tuesday that I didn't feel the need to get bearish here, and that price is probably going to trade at least into here. So I'm going to be waiting for that. I think it makes sense for this to at least test this kind of level and this order block. Maybe it has already reached it, but I do think this is going to just push at least a little bit further, and that's where I guess that we should start looking for bearish structures if you want to get bearish on it, if you want to trade it to the downside. And then, Syscoin's not much to update. I do have this trade ID on KNC. So if we zoom out to the weekly on KNC, Kyber Network, we can see, we can drag this here. So this is a very defined range level, and I'd say that this is very much the same. Right? So fake out, support, last kind of rally. Maybe this is going to go higher to completely test this, but this is like the first test of it. So it's probably going to come back down here, and that's a long in my opinions, and this is a short. So I don't know how you want to play it, and I'm not going to share how I'm going to play it, but this is a chart that I think is worth paying attention to. This volume is atrocious, right? Obviously the volume is on the USDT pair, and we can see something here where I do, like if this is going to make new highs and just keep on rallying off the high here, it's possible, but I do think that's a long shot. So support down here, right? Go to the daily. Is this thing just gonna keep on running? I don't think so. Right, support on the diagonal. I do think if we lose that, it's going to puke. And then I do think it's going to retest the fake out level here that pushed us higher. So essentially, on a daily level view, here's the last bearish candlestick to the downside that kind of nuked all the stops here. It would make a lot of sense to come back down and test that, maybe slightly higher like that. We could measure. Yeah, I mean, that would make a lot of sense to get either to the 0.618 level or the level here. And then I do think there's going to be a nice bounce back into this zone and retest it. So we're going to put that on the watch list and review as well on Monday. So back to some macro. There's a couple of things. The Bank of Japan said they will put in an unlimited offer on buying bonds. So they are trying to cap the yield basically on bonds. And that kind of means that they're preferring not to deal with inflation and prefer to keep the yields down. And it's going to cause inflation. So if we look, for example, at the Japanese yen, this is kind of getting weird in a way. Let me grab. Okay, so this is obviously FX land is a weird place, and things move a lot slower than in crypto land. But a weak yen, if they're gonna like do unlimited buying of bonds, that means the yen is just gonna weaken versus the dollar. That's a bullish thing for the dollar, but a bearish thing for the yen. And then where the hell does that put you if you think that's just going to continue on? That's the thing, you never know how long they're going to be able to put it up. But if I would apply any traditional charting techniques I use on Bitcoin, for example, it would make a lot of sense that this inverse head and shoulders is going to pop and the 0.382 is up here. If we grab like a symmetry or of this trend line here and then this trend line there, both are okay. This is 2%. This is 3 degrees, sorry, to the upside. So I think that the same is kind of happening still in Europe. There's some sounds today that there's some ECB members that want to increase or hike the rates. I don't know if they're going to do it. If they do it, they're going to destroy the southern countries. So it's going to be tricky. I think there's some who will want to do it, but I don't think it's going to happen in the next couple of months. Or maybe it's going to happen in the fall or early next year. But for now, the euro is weak. The yen is weak. China is flooding the markets to kind of like artificially fuck with the GDP numbers, but obviously China is also a little bit in a rut. I'm not really sure what's going on with the Australian dollar, which is quite a large pair as well. But circling back to why I started talking about this is the idea of the dollar to keep on going higher. I actually never showed this much of this chart, but I do think that the dollar is going to break this resistance. It's at resistance. And there's like a seller at 101. But it would make a lot of sense that if the Bank of Japan is adding liquidity to the market, the Eurozone is still doing it, China is doing it, there's just no reason until that changes to become bearish on the dollar. And that should be a complicated factor for any other asset. So we zoom in let's grab like 6 hour. This looks like it retested the level here, retested the level here, and I do think now is time to see the continuation up here. And that kind of aligns with, let's see, gold. So I posted some contrarian setups on Twitter, and we talked about it on Tuesday. I had 3 levels drawn, of which I'd be eager to short. It's a little bit of a shame that this kind of didn't go all the way up here, because this would have been so clean, taking out the high here and then losing it again. Unfortunately, that didn't really happen, but this was a short setup. This is a short setup, and if you would have liked to blindly short it, this would have been as well. But how the hell do you I mean, I wouldn't have done it. But there's something happening here with gold, and I do think that strengthening dollar, it's not going to help it. Same for Bitcoin, same for the S&P 500. So if we consider the S&P 500 rallying into, I think this ticker is closed, but it's rallying into the levels here now. It's very close to the rejection level here, and then I think it's going to come down. So here we got the futures. So if that all ties in together, it's gonna be a good moment to get short on Bitcoin again. Axie, still waiting. Either it's gonna nuke these lows here and then rally, but it's a tough one. Like, this is gonna start losing. There's a lot of weight to the downside, right? So if this is any measure for total state of market, kind of weird. So this same applies as last week. Any bounce into here, if it nukes, reclaims, probably get short. Cover any longs up here. And if we bounce without taking these lows, this is also the area to for me to consider finding a way to short it. What else do we have? Feel like I should have talked about Monero for a long time, but I haven't. All right, I think we're gonna end it here. I hope you enjoyed it, found some value in this a little bit longer than usual video, and remember, if you like it, subscribe, give it a like, or and check out our sponsor, Prime XBT. Appreciate you all for your time, and check you on Monday. Peace.